Welcome to Last Week in Finance. Today is Sunday, 26th of July of 2020, and we're gonna talk about the stock market. What's going on the stock market? And here's the thing. Right now, the stock market is not correlated with the actual economy, and that's what is the most concerning thing. Beginning of this year, late January, the S&P 500 was trading about in 30,000 and almost 400 points. Then in March, due to the COVID-19 crisis, went about 2,200. And well, that was a little bit exaggerated, if you ask me. But still, it was reflecting the concerns with what's going on really on the market, what's really going on the whole economy. Now, now that the sudden, meanwhile, the unemployment rate was starting, to get very, very, very badly from 3.5 unemployment rate to I don't know right now, but I believe the actual number is about 20%, something like that, unemployment rate. And now the stock market, the S&P 500, it's about 3,200 points. So how the heck the stock market went that high during probably the most severely bad crisis we have ever seen? And the Great Recession of 2008 is it's little kids game of what's going on right now. Well, it's very concerning. It's very concerning that the market is not reflecting what's going on. First, of course, if you have 500 companies that most of them are cutting jobs, firing people, or the new term they're using right now, furlough of people, of workers, and now I don't know how to put it. It's very concerning. A company, the market cap of a company should be up when the things are being good for that company. Not necessarily for the economy as a whole, but at least for that company. And most of these companies are selling less, producing less, firing people. Retails are shutting down stores worldwide. And now, are you saying that the market's going up? I mean, well, first things first. What's what's going on? The first thing is, of course, government intervention. They're doing quantitative easing, but they're not calling it quantitative easing. But trust me, that is QE. And the repo market is going way, way, way up. It's right now over 7 trillion. The Fed, the balance sheet of the Fed is over $7 trillion. That's a third of the US GDP. And here's the thing. Eventually the market's gonna cut up of what's going on. The market eventually will go down, and when it inevitable will go down, it's gonna be really, really bad. I'm talking about we're gonna lose 401ks, we're going to lose pensions, we're going to lose savings if you're saving in equities. And by the other hand, we have the interest rates, which are ridiculously low, artificially low. The treasury bonds are right now less than 1% yield. That is preposterous. So I'm not gonna get to the bond market either. And here's the thing: we have to very analyze if this is a paradigm shift or it's just a big wave there which just gonna have to take. Right now, what is most concerning is people are losing their minds. And by instance, right now with the stimulus checks, many people who never did trading or investing, they're going and buying these stocks, buying Tesla. Is in vogue to buy Tesla stocks. The fan stocks are going up, and I mean, don't get me wrong with the fan stocks. Most of these are great companies. Great companies that are fulfilling their purpose right now. For instance, Amazon. Retail is going down, but still people need their stuff. They need food, they need clothing, they need the basic crap that we buy every day, and are getting it by Amazon. So I mean, it's not far-fetched to see this market cap of an Amazon. Apple, well, not so much. Netflix, of course, people right now are subscribing more to Netflix and Hulu and Disney Plus and all that stuff right now. But most concerning thing is about other things that I'm hearing right now. And the thing is, people are saying the dollar is gonna lose their reserve currency status. I mean, let's not go crazy. It's not gonna happen. I don't see it, and I don't know. I understand that the Fed, the Treasury are doing these, you know, irresponsible things, if you ask me. But the thing is, the people who manage the other currencies, the euro, the British pound, uh, whatever other fiat currency managers, they're gonna do the same thing. They're gonna issue debt, they're gonna print more money, and well, we're gonna have is still, I mean, the dollar is gonna be the less shitty fiat currency, and that's it. So that's why it's not gonna lose their currency, the big shot currency status on the world. People's gonna they're gonna still save in dollars in third world countries. Their currencies are practically garbage, but they're gonna use it. But still, they're gonna save in dollars. So don't sweat on that. That's not gonna happen. So don't listen to people who do. The other thing that is very concerning that I'm seeing is with the gold rush. I'm not going. I'm not buying the gold rush. Right now, gold is trading around almost 900,000, 1900. I'm sorry, $1,900 per ounce. It was about a few years was about 1,200 per ounce, and I mean, don't get me wrong with gold. It's a great long-term reserve of value asset, but it's not an asset. It doesn't do anything. It doesn't produce anything. You just have it there. I mean, it's nice, it's shiny, and that's it. Of course, it has some applications with technology in small amounts. You can do jewelry with it, but most of the time, the gold is just overvalue or undervalue just because the value that people put in it, and that's it. The other thing is about crypto. I mean, I'm not a big, Bitcoin guy and crypto guy, but what I will say about crypto is that it could be an interesting hedging. hedging asset. Why? Because I mean, well, I'm not gonna explain why crypto works, but it's something that everyone can use around the world. So I'm not gonna say go crazy on crypto. I just say if you can spare maybe a few $100 to buy Bitcoin or Ethereum or the big ones, not the relatively unknown altcoins. If you can get your hands into crypto right now, it will be it wouldn't be a bad idea. So go ahead. Just keep it safe. Coinbase, one of these very known crypto wallets. And last, I mean, Warren Buffett says, be fearful when others are greedy. And right now, I'm on this because people in the world are going very fearful with this thing, with the COVID. They're washing their hands, using the mask, whatever, social distancing. But right now in the stock market, I'm seeing a lot of greed, and this is not a great time to invest. It's a great time, to be on the sidelines and see what's happening. Actually, that's the big guys. That's what we're doing. Even before COVID, they were just seeing, the market right now is overpriced. Remember, a good stock market when it's bullish and is going along a bullish economy where the economy is growing, the economy is expanding every year. Okay, that's very good, something that we should be proud of. But when things are going bad and the market's going up, that's where that's when you should be fearful. So be fearful right now and just, take it easy and save some cash and wait for the next thing. And thank you for listening, and we'll see you the next time. Bye bye.